Hello everyone and welcome back to the channel. My name is Brent and today we're going to be covering the M1 Finance Roth IRA, taking a look at 2 to 3 stocks that we're going to be buying here on the 4th of December 2019. I do have a few positions that I'm wanting to buy into. I also have some cash on hand of $253.54. We've had 2 days in the negative here these past few days, so I kind of want to look at what's out there and available that I can begin to invest and make my money work for me. So with that said, if you are tuning into the channel for the very first time, have not yet subscribed, I would really appreciate if you do hit that red button below to subscribe to the channel. Hit the bell to be notified every time we release a new video, upload a new video, go live on the channel, which is something I really want to do here in the future. If you do enjoy this video, find it helpful, hit the thumbs up. And if you have any comments or questions going over this video, a specific stock, real estate, or just an account in general, or broker, drop it in the comment section below. I do read and reply to all your comments, and let's go ahead and get into it. So we are going to be covering the M1 Finance Roth IRA, taking a look at the performance here over the past week. We can see we are in the negative. We did finish last week in the positive, but just these last 2 days here in December, with the trade market kind of being put on hold and have been constantly pushed down the investors' throats that it's going to happen, but it's not happening. It's kind of weighing now on the market. The market has moved as high as it can with the rate cuts that have been pushed out. The media and the president also pushing for a trade deal that is not taking place. So over the past quarter, let's go look at the quarter real quick. We have seen companies that are in the industrials and a few others that are just in healthcare make a break back towards some recovery. So AbbVie, pharmaceutical, healthcare, and such. And the other ones here, Caterpillar, 3M, which I can't find at the moment. There it is. 3M, I guess it hasn't recovered too much, but it was off. It was pretty bad lately. So it went down roughly 30%. It's made its recovery back. So that's all due to the trade war kind of getting pushed down everyone's throats these last few months or so. So with that, investors and businesses out there of the shareholders are kind of looking at it. What is going to be pushing the market higher at this point? Are we due to go higher here towards the end in the end of 2019 in December? Probably not. I don't expect it to happen. Having seen the market around November, December timeframe, the last few years, investors just take a step back. There's no new cash kind of going into the market. Everyone's basically maxed out their Roth IRAs. They're kind of waiting for January, February to do a lump sum investment into their Roths, or maybe they're going to do the cash, the dollar cost average. But I don't think big money is going to be moving into the markets and saving a lot of these companies till they readjust their portfolios. They sell out of some positions. They kind of clean it up. I forgot. It's rebalancing their portfolios right here. Kind of help me out. But I don't see a lot of that taking place here in December. It'll be at least January, February before we see a little bit of different movement in the market. I do believe December is going to be a bit of a negative month here, but that's fine. It's going to give you that Christmas shopping ability here. So looking at the activity, we did actually go and post over on Instagram all the dividends that we've been paid out here in November. I will be making a 1 month recap video for November. I just haven't had a whole lot of information to do that. We did actually get quite a bit. I did post over $100 in dividends over on Instagram. So check Instagram out if you haven't done that. Links down in the description below for Instagram. Now, I don't want to make this video too long, so we'll kind of cover what stocks I am looking at currently to invest some capital towards. Our $253.54. So Altria has been on my mind lately. It is going ex-dividend here in December. It has been negative for quite a while, but has made a big recovery. It was down roughly 30% these last few months, but has made a slow recovery as lawsuits and allegations against their partner company, or the company that they kind of bought a little bit into, Juul, has been, it's not then specifically with the cartridges that was doing the harm. It was the black market, these third-party cartridges that were being made incorrectly or having weird asbestos and other stuff inside of them. I think all that's been kind of pushed in Altria, it'll begin to kind of slide away, and we shall see Altria begin to kind of move back into some all-time highs, or kind of just trend sideways, and that's completely fine. Now, One of the reasons I'm kind of looking at Altria is, again, I've been kind of pushing it off these last few months because it wasn't going to be going ex-dividend until December, roughly around December 24th. Now, they just did increase their dividend from 80 cents to 84 cents. That puts them at let's see, 60, 63, that's $3.20 to now 84, which is 336. So a nice 16-cent increase there per share per year. So really nice to see that they're continuing to grow their dividend. They split off from Philip Morris, I believe, 10 years ago. They're going to be doing another merger with them to kind of fight off allegations and lawsuits against them as one big entity versus two. And they have a really good payout ratio for being a sin stock. They have to have a high payout ratio because if they have too much cash from their earnings kind of held on the books, they're going to just get hit with lawsuit after lawsuit. And it's better just to kind of pay that out to their shareholders. Shareholders will be happy, and they won't have to pay out so much money, I suppose. I'm not sure there on the whole thing. But the fact that this company is going to be going ex-dividend here in December is one of the main factors I'm trying to kind of just buy this one again. Plus, it is still negative in my portfolio. It has been showing some signs of recovery. Now, back in October, no, what was it? 6 months ago. Let's look at 6 months. So back in September and early October, this company was trading at $40 and some change with a starting yield of 8%. That is amazing. If you look at the 1 year, look back around September timeframe, you could get this one for $40.81, but we don't stop there. It goes all the way to $40.13. See, that was that low, 52-week low, $40.12. With a starting yield of 8%. Right now, while it's great to be buying this company, you're getting a starting yield of 6.46. That is not 8%. And still, if we look at the 5-year, look at how high this price was. And it wasn't until recently when, Juul had gotten into the mix and this company kind of went sideways. And as, media and I wouldn't say millennials are kind of against it because that's one of their Juul's focus target was, getting people off from cigarettes and kind of moving over to the e-cigarettes. I don't smoke myself, but I don't see this company going away or their products kind of going away in the next 5 or 10 years. So if I look at this company and just kind of give it a, which do I believe is going to go higher percent? 51% chance that this company will kind of go out of business and continue to decline, or 51 chance that this company will recover and move higher. I would say that there's a higher chance that this company will recover everything that's taken place here just within the last few years, and that over the next 5 or 10 years, this company will recover. The dividends will continue to get paid out to my account, and I'll just buy back more shares during this time frame, and I'll be better off having stayed invested and averaged down on this position versus selling out of it and moving into another position. It's a nice company, provides a very nice payout for investors and just kind of long-term buy and hold. So I don't think it's going to go anywhere, especially with the merger with Philip Morris. That's just going to be making this company a lot safer in the long run. So if we look here at the 52 200-day moving average and look at the past 6 months, it's going to give it a little bit nicer. This is going to go give you a support level. We can see I forgot what the symbol is here, the bottoming out period here, hit some support here at $40. Trended there on sideways at $40, never broke below $40.12, and then showed signs of recovery. Well, guess what? Now the company has broke past the 50-day, broke past the 200-day simple moving average. It is now trading above that 200-day, 50-day moving average, and has now 3 levels of support. It has the 200-day moving average as support, it has the 50-day moving average as support, and it has that $40 moving average as support. So, we have 3 different levels of support, and at this point, I do believe that the market is going to continue to push this one higher. You might see this one kind of lose a little bit of steam here now that it's trended so high over October. I think it's up maybe 4 to 10%, somewhere within that range, that if it does fall back and retest that $49 range or even fall back into the $45 range, I think this will still be really good as it'll kind of move higher here in the next 5 or 10 years. And that's I'm not looking for it to shoot up 30% over the next 3 months. So that's just not what I'm looking to see with Altria. So jumping back over to M1 Finance, the other one that I want to kind of buy into was Tanger Factory Outlet. This one doesn't go ex-dividend here. again until I believe maybe in November again, or not November, February again. So I do have a few months. I could kind of let this one kind of sit and marinate a little bit, but it is providing a little bit of a discount. I do want to get it over that $300 or the $800 cost basis. I've had a couple comments going over, why, how are you doing your $800 on different companies? That's just, I'm talking about my cost basis. I want my cost basis on all these companies to be roughly about $800. Now, obviously, I haven't got the best opportunity on many of these other companies that are down here. My cost basis goal on many of these other ones about $600, but I recently, a lot of these were already at $600, so I increased my goal of $800. Now I'm kind of increasing my cost basis goal to about 1,000, but I don't have the opportunity in a few of these right now, but it kind of comes and goes with time, such as Johnson & Johnson. Sometimes it's up 10%, sometimes it's down 10%. AbbVie, as you saw, was down 30%. Now it's only down 1.36, but it's up 30% in the other account. So you get some, you take some. So it's kind of interesting. So Tanger Factory Outlet is another one I plan on adding $100 to. So I'll probably add about 150 to Altria to get that to 1,000. I'll add $100 to Tanger Factory Outlet, and anything remaining, so I'll add 148 to this one, get it to 1,000. $100 to Tanger Factory Outlet to get that to 800, and then anything remaining, I'll add it towards Chevron Corporation. Now, Chevron and Tanger Factory Outlet don't go ex-dividend here until February again, so I'm just kind of buying these because they're already in the account. I did kind of post over on my YouTube channel a couple companies that I do want to do more research on, but I just haven't had the time to really dive in and kind of break these companies down and do more research on them to really add into my portfolio. I do want to add another 1, 2, 3 companies into my portfolio that I believe are trading with some value in them, or trading below the value line. I think I posted it over somewhere here. Okay, kind of found it now. So back about 4 weeks ago, I posted here a list of companies that I quickly took a glance at. So Exxon, Chevron, Waco Group, Clorox, Colgate, Johnson & Johnson, McDonald's, Telephone and Data Systems, National Fuel Gas Co., UGI Corp., 3M, Hormel Foods. Just looking at this list real quick, I would want to do a little bit more research really quickly on Colgate, on Clorox. So here, I'm not going to be adding into my portfolio right now. It's kind of like an extended part of the video now, not something I had really planned on doing. And if you guys want to stick around, we'll kind of just really quickly look at these and Hormel Foods. So the reason I put these on my list to check out is because over the past 1 year, if we look at Clorox, for example, we can see that Clorox has had a big decline. Let's go ahead and push in the 50-day, 200-day moving average, and we're looking at it to 1 year. Currently, Clorox is trading below the 50-day, 200-day moving average. If we look at the bar here, as far as yield is the bar, now we'll have to take, we'll take out these for now. But we can see here that if you're looking at it over the year, and you're just looking at it right now the way it is, are you getting a higher yield starting right now for the past year than you have had in the last year? Looking at it, yes. If you buy Clorox right now, you're locking in a 2.73% starting yield. You're buying at $247.93. That's basically at 52-week low, almost. There's probably a little bit lower, maybe 144 looks like it for the past year, but you're locking at that 2.73% yield. Over the past 5 years, there's been opportunities out there of a little over, probably about 3% starting yield. So you're not too far off that high starting yield for Clorox of 3%. But there's also been opportunities here where that price, the price was down at 120. So you're just kind of looking at risk reward. Clorox is a good company. I believe this is a dividend aristocrat. So if you look at the dividend here, it's been paying out dividends for the past, 90, so 10, 20, 30, almost 30 years of growing and paying out dividends in Clorox there. Now, the other one, Colgate, again, kind of looking at it over the past year. Not sure why I thought Maybe it's the 200-day, 50-day. Maybe I was looking at that. Okay, so that's what it was. So Colgate here, it's trading below the 50-day, 200-day moving average. I kind of posted this about 4 weeks ago, so it may have been right at this bottoming out point. Let's look at it. It was 1 month ago, so we'll look at the 1 month. Let's look at 3 month. So back about a month ago, we're starting December. So this is back here in November when I kind of posted this information over on my YouTube discussion or community tab. So right here, I kind of posted about Colgate. I also posted about Clorox right here at the beginning of November. So kind of gives you an idea that this company was trading below 50-day, 200-day moving average. It is giving you a starting yield of 2.54. It's going to be buying you around $67.45. I didn't go too much more into that just because it's, I only looked at it at a glance. I'm just kind of glancing at these and saying, okay, there's some potential here that these companies have pulled back and they're trading below 50-day, they're trading below 200-day moving average. Why did they have this sharp decline? Say, for example, McDonald's. Why did it go from $215 to $190? What was the reason behind this? Now it's showing some support in this $193. It's trading below 200-day, it's trading below 50-day. It's got some support from back in the $190 area. You can see this trend right here. It was some resistance right here back in the past where it was trending sideways for quite a while before it had that oomph to kind of get into those highs. Well, now it's using this past history as some support. So what's going to happen with McDonald's? Is it going to go higher? Is it going to go lower? You're getting a starting yield for the past year, almost a high of 2.45, which is pretty high for the past year. Is it high for the past 5 years? No. If you had bought this back in 2017, you would have got over a 3% starting yield, but we're just looking at 2019 because you can't go backwards in time. So this is why I kind of posted about McDonald's. And then if we're looking at Hormel Foods, okay, so I posted this about, 3 months. I posted this at the early November. I posted about Hormel Foods possibly being a buying opportunity, trading below that 50-day, 200-day moving average. It also gives a starting yield over 2%, which is really good for Hormel Foods. Well, guess what? Now we're in December. It shot up from $40 to now $45.54. You missed out on the 2%, 2% starting yield. It's now offering a 1.84% starting yield. I wouldn't say Hormel Foods is a bad opportunity now. Well, I would say it's a bad opportunity now to buy into this company because you missed out. You can see here that the yield was trading way above that price. If you look at the 5-year, you're basically, Hormel Foods, you're not going to get a whole lot of return on this company. Just kind of looking at the 5-year graph, it hasn't really gone anywhere in 5 years. But if you're buying this company and you're buying those dips where it dips to, say, $30, anywhere between 30 and 40, or you're buying it below the yield price line, then you just keep doing that, keep doing it. You're averaging down, averaging in, and you'd be a pretty good company to kind of buy and hold. I believe Hormel Foods has about a 46 year history on it. So just kind of looking at these, if I just want to show you the price now, just price and percent change over the past 10 years. I think this factors in dividends. I'm not 100% sure. And this has recessions, and let's just look at the recessions. So this is the max history of Hormel Foods. How much percent return has it had since inception? All the recessions that are out there, has this company made it through every recession out there? Has it always recovered? There's always been a hit here. You can see a recession here in 2000, got hit a little bit, recovered. That next recession didn't even phase it, just kind of chugged right through it. 2008, it got affected a little bit, but quickly recovered and has shot to some new all-time highs with that price. McDonald's, another good one to kind of look at long term. Again, recessions kind of hit it a little bit. Very minimal here in 2008. Shot to some new all-time highs. Colgate, just kind of chugging along. This one does get, it got affected by the recession just slightly, but quickly recovered, did that whole little V dipping, and just moved to all-time highs. Has been kind of trending sideways here, consolidating here towards the top, kind of waiting, consolidation right here prior to the recession, consolidation. That was a big increase there. I don't know. I wouldn't call that consolidation here because this is trended higher and then kind of broke down in the recession. And then Colgate trended sideways, fell, moved higher. And now it's kind of trending here sideways for a few months here. And Altria. So a lot of investors, and I see a lot of the media already saying that we're in a recession now by looking at earnings. Don't let the media fool you. Don't let what's going out there in the market kind of fool you. It's all sort of we're already in a recession, and investors just kind of we're waiting on the market to kind of catch up with what we're seeing out there. So that is that. Let's go ahead and make our buys. I'm sorry for the long video. I started this video off with the thought that I would make a very quick video. And now kind of looking at the time, we're at 20 minutes, so they changed this a little bit. I'm going to go ahead and put in 148 bucks towards Altria and confirm that. And then we're going to go ahead and hit done. We're going to go ahead and go back to our portfolio. We're going to go ahead and target Tanger Factory Outlet, hit that buy, and we're going to go ahead and put in 100 bucks here. It's going to put that one to roughly $800. Confirm buy. And done. And then our last one here, we're going to be buying some Chevron, that oil. We're going to go ahead and hit buy. We have, how much cash do we have? About $5.06. We're going to go ahead and punch in $7. Okay, we got to punch in $10. Can't do that, huh? Okay, 140. So I saw some investors kind of type in the Facebooks and such that M1 Finance kind of patched that you can't make buy orders of $10 if you don't have the cash anymore. So I'm going to go ahead and cancel this one and redo it for 140. Continue and continue. And this is going to allow me to now go back into my portfolio, select Chevron, buy, and I have over $10 now in cash. I have 13, so I'm going to go ahead and just put in 15. Ooh, they don't even let you go over your cash now, huh? 13.55. Nice. Okay, so they have like a little rule in there. So if anything's over your amount, you won't be able to do that. So interesting now that they kind of patched that. So that is basically going to be completing this video. We've put in 3 buy orders that are going to be coming up on tomorrow. We're going to go ahead and buy Altria, about 140 bucks of Altria. We're going to buy $100 of Tanger Factory Outlet and roughly $13.54 of Chevron. If you guys did enjoy some of this information on these other companies or have other companies that you're looking into, drop them into the comment section below. Again, I posted this over on my channel. In the community tab, if you select the community tab, you'll see some of the companies here that I kind of posted about 4 weeks ago. Take a look what's out there and available. There's a lot of companies out there that have actually pulled back, trading below the 200-day, trading below the 50-day, have really good starting yields for the past year and time frame. So just take a look at what's out there and available, and that is it. Thank you all for this video. If you haven't subscribed to the channel, would really appreciate it if you do subscribe. If you have any comments or questions, drop them into the comment section below and hit that thumbs up before you get off this video. So thank you all for tuning in. I will see you next time. Have a great day. Bye.